Dividend stocks are literally the cheat code in investing. It's the only actual passive income in the entire world. You buy the asset now, and within a few years, that asset not only grows in share price, but it also spits out some nice cash flow for you to start paying your bills with, or you could choose to make it an investing superpower called the dividend snowball, where those dividends start buying even more shares of the company or ETF, which is going to make you very rich very quick. In order to build the best list of the top 6 dividend to buy now in 2025 and hold forever, I wanted to pick a couple high dividend producers and many from different sectors so that you're well diversified and safe. 2025 should be a volatile year, and so putting all of your eggs in any one basket, which means putting them all in like technology stocks or healthcare stocks or something like that, is a very bad idea. My name is Nolan Govea. My students call me Professor G, and I made this channel to make investing simplified. So let's just jump right into it. The first stock comes from everybody's favorite sector, and that's the technology sector. And this one has a lower total dividend, but it has great price appreciation, which means that the stock keeps growing, and so does your portfolio, but also the actual growth rate on the dividend itself is skyrocketing. This one is one of the largest holdings in my portfolio, and this is none other than Microsoft. Microsoft is one of the largest companies in the world by market cap, solid competitive advantage in multiple ways, but most notably AI. It's got very sticky products and happy customers. Microsoft has had a 5-year dividend compounded annual growth rate of 10.26%, which just means that on average, the dividend has increased by 10.26% each and every single year consecutively. So if you hold the stock, not only do you get a dividend and that dividend yield that was stated when you bought it, but that dividend is actually growing, and so you got to buy it at a much smaller share price, got to buy the dividend in at a much smaller share price, and now it's grown. So that's an extra bonus for those of you that pick dividends and hold them longer term. You're gonna hear this compounded annual growth rate referred to as CAGR, and that's what that means. This is a metric that I seek out when I'm looking for new dividend stocks to hold forever. Microsoft has a 10-year CAGR of 10.35% and a total revenue growth of 14.57%. The stock price has risen over 161% in the past 5 years, and the dividend still continues to grow. The current price is $421.50. Over the last year, it's up over 12%. That dividend yield is a little bit smaller, but it's at 0.79%, and that dividend growth streak is 19 years. Meaning that Microsoft has not only had a dividend and issued a dividend for those 19 years, but each and every year it's grown even more. And I don't see that slowing up. The next stock comes from one of the biggest possible growing sectors over the next decade, and this one is energy, and specifically renewable energy. Nextera Energy, NEE, has developed one of the largest portfolios of solar and wind power assets worldwide. This segment is gained from the shift away from polluting carbon fuels toward cleaner, renewable energy sources. Given the long-term nature of the power transition, the company is poised for continued growth over the coming decades. In the past 12 months, the stock has delivered a nearly 19% return to shareholders. NEE has a 29-year dividend growth. The current price is $71.69. The dividend yield is 2.87%. And the 5-year dividend CAGR is 10.51%. Now those numbers are amazing, and when you're trying to look up dividend stocks, having the right tools is key. So I'd like to introduce you to today's video sponsor, Snowball Analytics. And this platform is what I've been using personally, and what I'm actually using in this video today to show you all the metrics. Snowball Analytics is a portfolio tracker that stands out. Think of it as the multi-tool for investors. What I really love is that the platform has a clean, intuitive design that's easy to navigate, and it's packed with charts and graphs that give you a deep dive into your portfolio and individual stocks. It makes it all super easy to just connect to your brokerage or manually enter your holdings, or just try a demo portfolio to educate yourself. Snowball caters to dividend investors and to investors with many brokerage accounts. It doesn't just show share price changes, it also factors in dividend income, which many other trackers miss. I like that you can look at top dividend stocks and search specifically for a certain sector, like I'm talking about in this video. Another great feature is the dividend payout calendar. You You can even see which dividends are coming in each month, how much you'll receive, and when. And for those who like to compare performance, Snowball's backtest tool lets you see how your portfolio measures up against benchmarks like the S&P 500, including dividends, and shows which stocks in your portfolio are doing the best in easy-to-read graphs. Anything you want to know about individual stocks, including their dividends, growth, and company metrics, can all be found here on the platform. I'd highly recommend that you check out Snowball Analytics with the link down in my description so you can get these awesome features for yourself and start your free 14-day trial. And receive 10% off your subscription with my link below. The next stock is just a solid cash-flowing behemoth, but I'm interested to hear from you. What's your #1 dividend stock to invest in 2025? Comment that down below so that we can start a nice list for all the viewers of this video. But this next one is one in the energy sector as well, which President Trump vows to make skyrocket this year, and this one is Chevron, CVX. Warren Buffett and Berkshire Hathaway own huge positions in Chevron and OXY, which is another oil giant. Warren Buffett's position in Chevron is currently worth $17.2 billion. Everyone seems to be moving towards that future of the EV train, or the electric or sustainable energy train, which is going to be a thing in the future. But for now, it's not the only thing, and people are forgetting that we still need those regular gasoline fuels. And even into the future, there's going to be certain things that need gas. Like, I don't see a huge rocket going off to the moon with a battery. I also don't see huge cruise liners or even trains being fully powered by battery. Chevron's a dividend aristocrat, also one of the most stable dividend growth companies in the energy sector, having grown its dividend for 37 consecutive years. Now, Chevron is down 2.9% year to date, which is a good time for investors to be buying. Over the last 5 years, it's up almost 25%. The current price is $144.84. The dividend yield is nice and high at 4.5%. The 5-year dividend CAGR is 6.49%, and the PE ratio is at 15, which is a very nice valuation and probably why Buffett likes it so much right now. The next stock to be sure and own is one from the financial sector, which is just a great sector to own and something to just have solid and steady in your portfolio. But specifically when you're looking at a dividend-paying stock, you want something that's going to be sustainable and not go up too high or go down too low, because you want to be able to count on that dividend. To be extra safe, I picked a company that has no long-term debt on their balance sheet, because that's just going to keep you incredibly safe. Rowe Price Group Inc., TROW, is an asset management company that offers a wide range of related products and services to its consumers. The company declared that its assets under management increased to $1.67 trillion in November from $1.61 trillion in October. It's focused on building its own ETF business and has been branching out into high-demand sectors like alternative investments. With no long-term debt on its balance sheet, it also has considerable flexibility to make adjustments as needed. In the past year, the stock has surged by over 5%. The current price of TROW is $113.09. The dividend yield is very high at 4.39%. That 5-year dividend CAGR is amazing at 10.29%. It has a 27-year dividend growth streak, and the PE ratio is nice and low at 12.4. Those numbers are some of the best that I've found all around. High dividend, great 5-year CAGR, 27 years of consistent dividend growth, and a PE under 15. That's all a lock for me. This next stock is also in the financial industry, and pretty much anybody that you talk to who's a serious dividend investor loves this stock for their portfolio and usually has it as a core position in their dividend portfolio. Visa Inc., ticker symbol V, is a multinational payment card service provider based in the United States that facilitates electronic fund transfers across the globe. The company also provides commercial patent solutions, sells cards, has virtual cards, and offers B2B payment options. What I like about Visa is that they've been accelerating the digital payment section of their business and have some exciting stuff coming out this year. The current price is $316.04, and it's up over 21% this year. The dividend yield is lower at only 0.75%, but look at the dividend growth average. That's massive. The 5-year dividend CAGR is 15.41% with a 16-year dividend growth streak. I love it. That dividend rating is a 98 from Snowball Analytics, which is one of the highest I've seen. Over the last 5 years, the company's share price has grown 63%, so that, coupled with the crazy high average dividend growth rate each year, makes this one another lock for me. The last stock that I want to highlight here is one from the technology sector, but not just technology, one of the hottest parts of technology and the sector that's expected to boom the most over the next decade, and that's AI and semiconductors. This one's not only an amazing dividend stock, but also just a growth stock in general, and it has been on fire. This company is a bit of a sleeper because Nvidia and Taiwan Semiconductor are taking up all the spotlight in the semiconductor sector, but this one I actually like for investors more than both of those. Broadcom Inc., Avgo, is a multinational tech company that specializes in semiconductors and related products. As you can see here, over the past 5 years, this thing has gone straight up. It's up over 674% in that time period. The 5-year dividend CAGR is 7.12%. By 2027, Broadcom's addressable market at its 3 main XPU customers will grow to between $60 billion and $90 billion, up from just $12.2 billion in AI chip revenue in the fiscal year of 2024. The current price is $231.84. The dividend yield is at 1.02%, and over the last year, it's up over 100%. Watch either of these 2 videos to keep you going strong in your investing this year in 2025, and remember to comment down below what your favorite dividend stock is for this year. Thanks for watching.